I got an alert for fosl fosl on the Nasdaq Stock Exchange. Fosl Group Inc. Check out this mountain. All right, and here we are. I got an alert triggered last week. And look at that. Look at that. Is that a bottom? Is that something? Is that a stage one? Remember, these are monthly candles. So, let me explode that. Let me scoot that over to the left. There we go. No man's land. Create myself some black area. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. See, that's 1 year. A year and a half. What do we have? See, there's a few levels right here. Started going down. Had this pattern here. Broke out. Moved up. And right now, this is it. Let me see what I'm dealing with. And fosl seems to be breaking out on my monthly chart trading framework. All right, this is it. This is what it looks like. Okay. Pattern, breakout, reach some previous resistance, makes a bigger pattern, works its way, 1 month, 2 months, breakout. And then after that, we're in May. If this candle closes above 1750, 1740, 1750, if we get a candle close above that, I have a measured move added, breakout line all the way here to 27.94.28. The only thing, that's just the implied measured move added to the breakout line. The only thing is, if I'd be doing my chart trading framework, I have a concept called target considerations. And I would try to identify any resistance along the way, or walls, which is support turn resistance. Here you see we had this pattern, support. Broke down. Now it went down. So this support now becomes resistance. And that's pretty much here at the, just a little lower right here. So what I would do is I would cheat, but in my favor, purposeful cheat, just lower the target. I used to put my targets like, that's the measured move, and sometimes I get like super close, like laser accuracy. It's crazy how the swing rules sometimes, like, but you notice those times, right? So all the other times that either you didn't get to your implied measured move or you got above it, you don't notice those, right? Humans have tendency, it was laser precision. Well, the swing rule does, you'll get close to an area, and the thing is, you have to recognize that if ever your target goes through some resistance, important resistance, then you'll be wiser just to put a little under. Sure, you lower your reward, sure, you lower the risk to reward ratio, but you're better to get a 1 to 3 successful risk to reward ratio and hit that 3 times the reward, than have a 1 to 4 risk reward ratio and not hit it. And after that, the price could go back down, then you reach your sell stop, then you lose 1%. You don't want that. So you want to increase your chances of reaching those probable targets, and you have to decide that at the beginning when you set up. When the breakout candle here, on my monthly chart trading, I put my sell stop right below the breakout candle. It was low, below the wick. That's my risk. And after that, buy the position size sufficient for this not to be one more. You wouldn't lose more than 1% of your NAV. And after that, you put your profit limit at the target, and that's it. But right now, we're just doing my monthly chart trading framework to make sure the wind is in my sails. So let's head over to Stan Weinstein on the 5-year weekly. Hold on, let's clear a bunch of remove all trend lines. I'm just gonna put this one here, 1750. That's all I need. 5-year week. Oh, that night stage 4, stage 1. All right, let's zoom in. Let's see what's happening here. The volume always gets my attention. What happened? Look at this crazy candle. This one right here. What does it correspond? Corresponds to this arrow here. What was the RSI at that moment? See, RSI was going up. Let's zoom in some more. Use that charting software. Don't accept whatever's being proposed to you on your chart. Get some software which you're able to zoom in, zoom out easily. And it's like in any type of work, sometimes in my field of work, in systems engineering, there's people do documentation. But if you're doing it in a Word document, that's super heavy. Go in the Word document, open it up, add some stuff, remove some stuff, the formatting, etc. Save. You need some software that's faster, live. Multiple people could modify at the same time. So let's say like OneNotes, Microsoft OneNotes, where you cut and paste, does OCR, does a whole bunch of stuff. It's very flexible, so you use it properly. Use it to store documents and share that information. That's the purpose of the document. If it's static and people are afraid to open it, they can't find the file, they don't update it, they don't use it, the information gets old, it's useless. Same thing for trading. Trading software, make sure you have something that's adapted to trading or chart trading. If you need to zoom in to make sure you have precision when you set your lines before you enter, before you do your measured moves, get that. If you need to scoot over the margin to get some black space to think, get that. Get that software. All right. So right here, I think there was a breakout right here. Or even lower. Right here. So what do we Stan need? Remember Ichimoku clouds? I'll take them off. Stan didn't use them just to start. Then I'll explain why I use them. Okay. Hide legend. Horizontal breakout line, check. 30-week moving average trying to go up, check. Volume, crazy volume. You need twice the average volume the previous 4 weeks. Check. Whew, a lot more. And that's it. You would have entered here on the breakout right here. You would have put your sell stop if you're an investor below the bottom of the pattern right here. And the trader's way, you could have put it below the 30-week moving average, below round number, or below maybe here. It's up to you, but I've noticed the traders, you have chances sometimes of crazy pullbacks, of getting caught. Don't get greedy. Often people say, I'm going to put the trader's sell stop at the beginning because I want to have a bigger position size, because this is 1% of your NAV that you might lose. Guys, don't do that. Don't do that. Do the investor's way. Small position size. Sleep. And there was an interesting post from somebody on Twitter today. Mistakes are good. If it liberates you, if you accept them, it's freedom. And I try to I need always a manual, well, how do we exactly do that? Well, my response was have sound capital management, in this case, money management. If you only lose 1% of your NAV, then making a mistake, you're not going to lose any sleep over it. You're not going to stress about it. It's the cost of your freedom to be able to think and do other things and not worry about losing your nav, crippling your nav, and not being able to whatever you want to use your nav for, and you lose it. With money management, you only lose 1% of your nav. That's the cost of your freedom. Worst case, you lose 1%. Take a small position size, even if it's 1%. You might not get triggered out. You'll stay in the trade longer. It buys you freedom. We won't be afraid of the whipsaw, a crazy whipsaw. So use that as a mechanism to breathe. And trading is over time. It's not that one position where you got greedy and you put a sell stop too close. That's going to make the difference over the long haul. Put a position size, take a sell stop the furthest possible away, and over time you won't notice that, and you'll actually make more money because you'll get less initial whipsawed, and you won't have to go for Hail Marys. You won't lose these 1% of your navs initially. You'll be able to stick in the trade. All right, fosl, what else happened? Initial pullback within 1 to 3 months. 1, 2, 3, 4. 5 weeks. Was on the contracting volume. Oh yes, look at that. Contracting volume, smaller candles. Would have been great here. So you buy here or you wait. Pull back. Anticipate the pullback. Contracting volume. Wow, you're happy now, eh? Even bigger position size because now the risk is lower. Buy here, sell stop down here. 1% of your nav, bigger position size than here. And that's it. After that, went back up. And you actually had another breakout candle right here. This one right here. That's twice the average. Look at that. Over here, on top of that, breakout candle, multiple breakout. And that's what you want when the stock starts building up. And it goes up. Enter Ichimoku cloud. So Stan wants 40 to 50% move before you get in. And this has been done here. And me, I'm old school, or I like picking and choosing. And this is the final resistance right here. This Ichimoku cloud is the final resistance on my way to entering the trade. Is it going to go here? Is it going to move towards the 30-week moving average? And then after that, I'll have to buy a breakout here again. It could be. Or I could just wait for a pullback for that breakout here and just wait for the pullback because the resistance here is going to hit. And check it out here. Check it out. You could even, it's almost like drawing you could pull back here and go back down here and then break away out here. If it does it again, even better. So you get in here. This is now a while previous resistance turns support, and now you'll have your support right here on the pullback. If you have the pullback on the contracting volume, probably have the RSI deflate a little bit and then go back upwards above the Ichimoku cloud and above 1750. So maybe the pullback, I don't know if it's going to go deep in, but after that, when the price action starts going back up above 1750, then you're golden. Actually, 1750 is the next 2 weeks. So the price action has to stay up. So 1 week, 2 weeks, close above, monthly candle, defined, breakout, check. Even if the price goes back in the next following weeks, it's okay. You still have, it's a natural pullback. The monthly candle breakout is still valid, and then you go up. This is how I imagine fosl, how I'm going to play it, how I'm going to wait. I used to look at a chart and just say, oh man, I have to get in here, and I didn't know why. It's a breakout, and I'm scared to miss out. And I'd get in, and I do the first part that I described, put my sell stop somewhere very close because I always get greedy. And after that, pull back. And then, oh, why is it always me? What happened to me? And I didn't have the just the knowledge, or I just don't understand the pullback. It's like a pullback was a failure, it was a mistake, but actually it's not. Did you ever see a chart just go up one line? Yet I was expecting my choice of my stock going up to be one line. It's just crazy thinking. So once you get to remove that from your head and really draw the lines of the pullback, not just say, there's pullbacks, it's a pullback. No, I actually see where it's going to go. Where's it going to go? Previous resistance turn support. See, I'm going to even put another alert here. So if the price action eventually goes down to 16, hey, why did I put that there? Well, it's because it's going to be a trigger for me to try to catch it on the way back up. Simple as that. Alerts, get you back to the chart, and then you say, that's why I'm back. Look, the volume went down. Perfect time to get in. Sounds good, right? And even a pullback on contracting volume actually confirms even more the breakout. Increased position size confirms a breakout. What else do you want? I'm like convincing myself never to enter on the breakout. I'm just going to say, breakout, check. That's just part A. I'm going to wait for the pullback. No pullback, I'll just move on. All right, FOSL. This one's been real. Let's see you at the end of the month for that close above 1750. Ciao.